Hi guys, welcome back to my channel. Kelvin here. For this episode, we have Timothy Ho from the Dollars and Cents. Welcome to the channel.
Thanks, Kelvin.
So just in case you guys do not know, Dollars and Cents is a platform where it shares everything about money, personal finance, savings rate, even property. How did you start Dollars and Cents in the first place?
Alright, so me and my co-founder Dinesh, so we started the site officially in 2012. That was when we just graduated from university. But it was not meant, it was a passion project, so not even meant to be a job or even a business. So we actually had the idea back in university, but we only started it after uni when we got our first job. So for the first 3 years, it was just a passion project. We didn't intend to make any money, no idea that it can be a job or even a business. Then it's only in 2015 where we decided to do it full time, because by then it was starting to take a little bit of traction, and we could actually see that, hey, this could be realistically a full-time job that we can do as a media business, so work with advertisers, and then obviously continue writing content that we hope people will read. So that's how it started.
Right now you have grown to quite a big platform. Like, I think anyone who talks about personal finance will have found your platform at the top of the Google search.
I think especially for articles, when people want to read something, maybe not so strong on videos or podcasts, or YouTube channels and stuff, but at least for articles, I think because we write quite often, we have an in-house full-time editorial team, and obviously their job is just to produce content along with myself as well.
So as the boss of Dollars and Cents, I know that you work super hard to the point that you have very little personal time. That you mentioned that in one of your interviews. So how do you balance between your working life and your personal life?
Okay, cool. I think one of the things that has been a transition for me personally is over the last few years I've become a dad, so I have kids as well.
Congrats.
So thanks. So we have three kids right now, and I think they're all quite young. So I think as much as we like to say we work very hard in our job, to be honest, when I look at the actual amount of hours I put in versus my other friends who work in other companies, sometimes I don't think we're actually working any harder, maybe just as hard as if I work somewhere else. I think when you have kids, right, I think time is a commodity for sure.
Yes.
Because you have to spend time with the kids, you have to bring them out, eat, weekends, you just have to run a lot of errands all the time, send them to school and all those things. Not necessarily means that you work very, very hard. It's just that the juggling is not easy. Right. So you maybe sometimes don't have a lot of spare time for yourself at the end of the day, right? You want to Netflix 1-2 hours, also not so easy sometimes, right?
Right. So so you have family time, working time, but do you have any time for yourself at all?
So that's the part that I have to find time to. I'm quite into fitness, so as much as possible, I like to find time to go to the gym, have a run. But it's not easy. You have to carve out time, right? So one of the things is that you got to do it on maybe on the way to work. Some of these things, or just before you go to work, you run in the morning when your kids are still asleep. So I think these are the things that you, as a working adult, not just me, I think most working adults, you have kids, that's the part that you really have to find time for as well.
True.
I think one of the things that I just want to add also is that I'm quite fortunate because my passion since young was already in finance. So if you ask me, hey, how do I find, it's part of my job today to know about the financial markets as well, right? To keep reading up about fintech developments, stocks, investments, CPF. So because of that, in some sense it's a blessing because I don't actually need to find additional time to keep up to date with some of these things.
True.
Sometimes when I eat, I don't even want to read about finance anymore, right? I just want to read something else.
Yeah, that's the same for me. I get to research more about my investments.
Things you want to know.
So everything gels up together. So I have to spend extra time to do it.
Actually, just to share a little bit. So when I was not doing Dollars and Cents full time, I didn't have kids then, I actually spent more time overall because I had a day job, and then I still have to spend my evenings and weekends either writing, researching, or just reading up about the financial markets. So I would say that that's actually, to me, if I have to do it today with my kids, I can't imagine myself doing it. But right now I can, because Dollars and Cents is also my job, so it's kind of like my job to know.
Yes. Quick pause. We are now in November, and you know what that means? Even more sign-up bonus from Weeboo. Weeboo has further increased their sign-up bonus to $150 cash voucher. All you need to do is deposit at least 2,000 SGD into Weeboo, buy a US stock or an US ETF with a minimum transaction of at least $100. Then buy one option on the US market, while maintaining a 2000 SGD net account value for that 30 days, and you will receive all your free rewards. So if you are interested, you can sign up with my link down below. With that being said, let's get back to the video. Speaking of personal finance, how do you manage your own money?
Okay, so I think for me personally, and actually for me and my wife, because she shares a similar approach and philosophy towards our managing money, I think one of the first things that we were very lucky to learn from a young age is just to be a good saver.
Okay.
I think when you are naturally a good saver as opposed to being a good spender, it is easier for you to budget, to accumulate, and then with the excess, then you can actually deploy the money into where you want, right? So I think being a good saver is vital, and if you're married, then you and your spouse have to have similar attitudes towards money. I think from an investment point of view or wealth building point of view, I think one thing I always like to share is, and I feel this is something that maybe in recent times it has not been prioritized as much, is that you can have different approach towards your investment success, right? So sometimes people would ask, hey, should I go for growth stocks or dividend stocks? And the answer I will have is, why not both, right? We don't need to choose one over the other. I think in the last few years, there has been a shift in attitude towards people wanting to maybe just ask themselves, where is the place that can give me the highest returns, right? And then, okay, because this gives me the highest return, I'll park my money there. I don't think that should be the correct approach towards long-term investing. I think that all of us can afford to invest in different strategies at the same time. So for example, I just give you an example. I put my money with robo-investors, right, robo-advisors, but I also make tactical investments either in ETFs or stocks on my own, both within Singapore and outside of Singapore, right? It is not that I'm contradicting myself. Hey, if he thinks he can make higher returns investing in stocks, obviously I think I can, that's why I invest in the stocks tactically, then why I invest in robos, right? It's not a contradiction, right? It's just simply a strategy to diversify our risk, right? Another example I would say, which I personally also do, is CPF savings, top up CPF account, right? Is it a contradiction if I choose to also top up my CPF account? Because at the very least, I know that by the time I reach 65, I will have a retirement nest egg enough for both me and my wife. But then at the same time, I also want to invest on my own, right? So I don't think we have to choose one over the other. I think we can take a diversified approach towards managing money and investing in different instruments that we think will bring us to where we want to head towards.
So when you mentioned that you can do both like growth stocks and dividend stocks, like personally for me, I would go straight for growth stocks because
that's where the difference is, right? Yeah, correct.
So because I need to like aim for this financial independence, retire early as fast as possible. That's why I can't afford to go into dividend stocks. I think that's the same for CPF. I don't really top up to my CPF, even though I can save on taxes, because I can't touch the money until 30 years later.
I mean, I do have a thought here, which I also, is part of my approach towards how I want to see my financial future, right? So to me also, I'm also aiming for early retirement, right? I don't want to work till 65 and then my CPF money come out. So don't get me wrong, I'm not aiming to work till 65 as well. But I think the way I see it is that by having different strategies, right, we can hedge that risk of, let's say, for example, if I were just to invest and I don't care about my CPF, or even take my CPF money to invest in the hopes that I can retire early, there is a risk that we may be wrong in the way we invest, that in 30 years time and now it's quite different. So to me, the middle ground here is that, okay, I will still make sure my CPF dollars can accumulate such that I will have a reasonably comfortable retirement by the time I reach 65, but I also want to try to aim for early retirement.
Right.
So that could be in the form of my investment portfolio, the robo portfolio, or even just investing time into the business in the hopes that if there's a sale, then you get some money as well, that you can actually stop work a bit earlier. So I think these are all different strategies that we don't need to choose one over the other.
Right.
That to me is my approach.
Yeah. So you take the balanced approach, lah.
Yeah. I mean, another example, I think you will relate to, so when you have kids also, then you also have to think about kind of like the short or the mid-term requirements as well for funds, right? So you definitely don't want to put every single dollar into CPF, because then if they need the money for education, how are you going to do it? But at the same time, we also don't want to take the risk of just investing everything in the growth stocks, because what if at that point in time we need the money,
Right, true.
the portfolio doesn't pan out.
Okay.
So I think different goals also requires different investment approach.
Depending on your goals, I feel.
And it's normal to have different investment goals, I feel, like not just one goal.
So like you mentioned that you invest in robo-advisors, but what else do you invest in?
So I do invest in stocks. I do invest in ETFs as well. Some retail bonds.
Okay.
I would say that the property play is also something that I'm not totally avoiding. So there is a property play that can lead to our retirement as well in the future.
Okay.
And then lastly, of course, CPF as well is vital.
Okay, I noticed you didn't mention crypto.
Yeah, not yet.
Not yet lah.
Yeah. My reason is very simple. Compared to the other asset classes that I invest in, I am less familiar with it.
Okay.
I think it's, over the last 2 years, obviously we hear a lot about it as well. It's like a roller coaster lah. The ascent is good, the drop is even faster, right? So to me, it's just simply a matter of I think investment opportunities are all around us, right? Crypto is one way that you can invest. It's not the only way you can invest, and at the end of the day, I think you need to invest in what you are comfortable with, right? And I guess coming from someone who maybe can be considered a little bit old school, who have been here for 10 years, crypto is just something that over the last 2-3 years has kind of came up. So I'm still not comfortable to the point that I would invest, but I'm looking at the space, obviously naturally interested in what's happening.
Okay. Like obviously, if crypto is good, you stay, and eventually, I think the opportunity will just present itself lah.
I think naturally, even if some of us were to invest in crypto, I feel like it is still going to be the same approach that I take with my overall investment portfolio, which is that just a small percentage.
Correct.
In the hopes that something will pan out, but then you can't. It's not wise to just say that, hey, this is my main strategy.
Yeah, correct.
What do you think, Kelvin? I mean, is that something that
So
resonates?
for crypto, personally, I just keep it less than 5%.
Okay.
This one, I believe, like for everyone, right, who invests in crypto, nobody understands crypto 100%.
Okay.
Like, I believe that, like, okay, Bitcoin, Ethereum, Solana, you can say that is a good crypto, but I don't believe that everyone reads the white paper. So everyone just thinks that, okay, the adoption will go up, but why would it go up?
Yeah.
Not everyone can answer that lah. So everyone just thinks that this could be the next big thing. That's why they're just betting their money into it.
I would say that it's also a little bit like stocks, right? So when you say that stock investing is good, you're not. It's not really accurate, right? Because there's like how many tens of thousands of stocks, and obviously there will be many good stocks that will give you the returns over the next 20-30 years, and then obviously there will be a lot of stocks today that will be gone in 20-30 years.
Right.
So I think at the end of the day, the key thing here is that, especially if you want to invest in individual stocks or even cryptos, right? You have to really understand the reason why you're investing into that specific stock and not generalize it as an asset class.
True. Well, I think for Bitcoin, the reason is to the moon. So that's why it's so volatile now, and people are panicking when it drops.
Which they shouldn't be, right? If they believe it will be to the moon. I mean, that's also my other thoughts about it.
Okay, so you once mentioned that money is a means to an end. That's what you learned recently. Then what's your purpose for investing and growing your money?
Yeah, I always believe, the other analogy, the parallel we can think about is like health, right? So health and money are kind of like, to me, enablers, right? They enable us to do something else in our life that we want, right? That could be to spend time, enjoy time with our family, our friends, right? Our family, right? So you got money, in some sense, you sometimes can afford to buy time. You maybe don't have to work as hard, especially if you don't really like what you do. And it's the same with health as well, right? If you don't have the health, then you can't do the things you want.
Right.
So to me, it is important to have money, it's important to have health, but it has to be for some other objective that we have or goals in our life, right? For some people, myself included, we want to make sure that we can take care of our family, especially if we have elderly parents, and that's where the money is important, right? I think for other people, it could be, they might want to, retire early, but it's not just to retire early, it's to retire early so that they can do something else
correct.
after their retirement, right? That maybe they prefer, like, volunteer time, travel the world a little bit more, be able to do the things they want to. So I think that's my idea about money. And one of the things I found, running Dollars and Cents also is that, when you do like what you are doing, which in our case, obviously, we are passionate about the business we have built, otherwise we wouldn't have started it in the first place, then the money is kind of like an enabler. It allows me to continue doing it, because obviously if I'm not being paid, then I can't do this full time, right? But because I am being paid and it's enough for me to take care of my family, I can still continue to do this, enjoy my time working, where, even if I put in 10, 12 hours, I don't feel like, as bad as, if I'm working a job that I don't like. So I think that's how I look at money.
So earlier on, I asked that question, how hardworking you are.
Oh, okay.
So do you feel like you have past the hardworking part, or do you feel like you want to reduce it down to like maybe 5 hours a day kind of work?
I don't think that I want to necessarily, I mean, to be honest, right, like if I had more time each day, which I don't, I wouldn't mind spending a bit more time on both like Dollars and Cents as well as my family, right? Because I don't mind, there are things that, I have on my to-do list that I actually don't mind doing, just that I have no time. Right?
Okay.
And the same thing with my kids as well. There are things that I don't mind spending time with my kids or my parents that I have to manage because I don't have that much time. So I'm not necessarily trying to reduce the amount of work that I have to do, because I do genuinely enjoy it.
Okay.
Right?
100%?
I mean, look, every job there is things that you like and you don't like, right?
Okay,
so, I might like writing, but, if I have a terrible client trying to call me, I don't enjoy that, but, it comes with every job. It doesn't matter whether you're a business owner or you work, as an employee for someone, you will have parts about your job you don't like, and you try to sell. But in general, if the good things outweigh the bad, and you are being paid a decent salary that you can continue doing what you enjoy, I think that's good enough already. So I think the advice I would give is that time management, balancing our time is quite important. So I would say that I don't have as much time to, for example, meet up with my friends from school in the past.
Okay.
Unless sometimes they happen to be in the financial industry, then that one is a little bit easier because we can chit chat. Like we can meet up and just talk about. In a way, it's like talk about work, but we are talking because we do enjoy each other's companionship, So I think it has to be kind of like integrated to the work. I think that's the downside. And, even if we talk about taking leave, going overseas and all those things, now that the borders are open, I think you have to, find time to set aside your work, allocate it to someone. You got to plan towards it. So that those things are some of the parts that we have to balance.
I'm at a certain point, right, where I try to quantify the time in terms of money already. Like, I can take a bus to save money,
Yeah.
But if I spend $30 on a Grab, I can do more work, or I can spend more time with my family. So in that sense, my time is worth more than just that $1.
Yeah.
So I'm at this point already.
Okay. I think my advice is that, and I also sometimes, think about it that way to some extent. I think we also have to draw the line between our work and our family time, right? So in work, you want to be efficient, right? You don't want to hang around 1-2 hours and do nothing or just waste your time, chit-chatting for no reason, right? But that's a time we set aside for work, and we want to be efficient with it. I think when it comes to family time, I feel like it's very hard to try to want to be efficient. I don't think we need to be efficient with our family time, right? So, if our kids take a long time to eat, to eat, that's fine. Right? Even take 1 hour, 2 hours to finish. I mean, not 2 hours, 1 hour, to finish dinner while you talk to them and feed. I think that's okay, right? Versus if we just sit down and eat 1 hour, I think that's a bit slow, right? So I think that's how I am looking at it. So for example, like if I go out with my kids, we go to City Hall or something, we taking the train there, taking the train back is okay for me. Right? But then if, let's say I am finishing work late from an event, I probably will cab back. Right? So I think there is that difference.
How much money is enough for you?
Oh wow, I think that's like a question everyone likes to ask. I don't know, I don't really have a great answer to this question because I never thought about it. I would say that what we have right now is actually enough for us already. Not that we earn a lot, but like I say, our expenses we try to not spend so much. You know, of course, you know, with the kids, you know, you try not to skim so much, and like, you know, if they're sick. I mean, like I always tell people, right? How can you save money when your kids are sick and you need to go to the doctor? You have to go means you have to go, and whatever the bill is, you know, as long as they are the right diagnosis and whatever, you just pay, right?
And kids, the doctor bill is not cheap, right? It's like 2 times of our normal bill, right?
Yeah, but you know, as a parent, if your kid is sick already, how would you not want to spend just to make sure everything's good, right? So I think how much is enough? I think right now is okay, it's enough. Can I do with more? Yeah, why not? Can I make do with less? Also can. I think the key thing is that, you know, you just want to make sure that whatever you earn, you are able to budget your expenses around what you earn, right? Especially, I think for those of us who at least, you know, earning the medium income in Singapore or above, you know, it's not like, you know, we can do it if we want to lah. But of course, you know, if you might need to make sacrifices, right? So like, you know, traveling overseas twice a year may be a bit expensive, especially once you have a bigger family, right? Buying a car based on current COE prices today may not be very feasible, especially if you can just grab or even just, you know, rent a car if need be. So I think there are some sacrifices, but I would say that right now it's okay enough. I don't think we need a lot more.
Okay, so my follow-up question would be like, okay, so you have enough now. What's stopping you from upgrading your quality of life further, like getting a bigger condo, buying a car, this kind of lifestyle?
Yeah. I think what I've done a year ago or so is that one of the things that I really wanted to do was to stay very near my parents, right? So we actually bought a place that is in the same block with my parents right now. So in some sense, yeah, you know, that's what I wanted, and we were, and when we could afford it, you know, I was very, very thankful that finally we can do it, you know, and I'm very contented with that. I mean, the truth is that if you give me like 2-3 mil now, honestly, I wouldn't exactly, besides probably investing a large part of it, I wouldn't really, I mean, investing, of course, why not, right? But I wouldn't really channel it into any kind of spending that would significantly improve my life lah.
Okay.
I don't know if that's a politically good answer or not.
I think it's a good answer, like you know what makes you satisfied, and you have attained it right now. So anything more than that is already luxury that you don't really need.
Yeah. You know, I think one of the things that I had to shift my mindset when we went DollarsAndSense full time was that I realized, because I had to take a pay cut, right, to join. So I don't mind sharing in front of everyone. So my first pay when I joined DollarsAndSense full time was 2,000 a month, right? And then I still contribute CPF, right? And at that point in time, I mean, the truth, I've been working for a few years already. So I think $2,000 within my circle of friends, anyone who's employed, I think they earn more lah, for sure, right? So when I had to make that decision, I had to critically review all my spending, right? At that point in time, like I said, I don't spend a lot, but then I had to review everything. And then, so then you have to learn how to make do with lesser money, right? And then of course, as you work harder and you see a little bit more success, you increase your salary lah. You don't take that, because you know that would be quite hard for 3 kids, right? And then you just, with the extra money, you're able to afford what you really want, and I think that's good enough.
Okay. Yeah. So what would you say to
politically
people?
sensitive?
I think it's alright.
It's okay. I scared I cannot cancel, you know. Like.
Then what would you say to people who say that you don't have a life, like you're saving too much money? Like, so people will tell me like, hey Kelvin, live a little don't every day save too much money.
I get what you mean. I think it's like, you know, the whole idea of budgeting, right? So you want to take, you know, your salary let's say, you know, when I first started working, right? This was before I took the pay cut lah, right? You know, I made about $3,000, let's say, right?
Okay.
I try to put, that time you can save more. So I try to put aside at least 50% of my money in saving and investing, right? Then the remaining amount, which is like I think 1,000 something after CPF deduction, you spend on whatever you want within that budget, right? So you set aside what you want to save and invest first, and then you the remaining amount you have, you splurge on however you like, right? I think that's the approach that I would take, is a budgeting approach versus like looking at it in either extreme, right? So looking at it in either extreme means, okay, like I have this amount of like $3,000 I can spend, I just spend and live my life to the fullest, or I have $3,000 as my salary, and my minimum amount I need is, let's say, $800. So I spend 800 and then I save the rest and invest. So to me, it's like you set aside a percentage of your salary to save and invest, and then the rest can be spent. Right? And as you grow older, I think the tendency would be that proportion tends to be lower, especially once you have kids.
True.
Right? So 50% quite easy if you want to when you are single. But I think when you have kids, maybe 20% will be maybe more realistic, right? So,
what is one thing that you would spend money on, no matter what's the price?
I think healthcare insurance is a huge component of our. I was recently just reviewing all the insurance policies we have because we had a newborn a few months ago. So I was reviewing it, and I realized it really adds up, right? So my insurance policy, and obviously I need, because I'm I'm working, I'm the breadwinner. My wife also, so she also needs insurance policy, right? Because she brings in an income as well. Then you got the kids, and the kids is just multiplies, right? So if you have one, you buy a CI plan, you got a healthcare plan, then that's a certain amount, and then you just times 2 or times 3. And I realized just how much it is actually, right? Yes. And that's one thing, and also their healthcare as well, I would say, right? So that's something we splurge on. It's quite hard to I think as an entrepreneur, when you work quite hard, right, it's quite hard not to want to spend a little bit to decompress, go to a date night for a restaurant with your wife and stuff. I think that's also a bit of an indulgence, meaning like you can do without, but sometimes you just want to spend to chill. I do pay for sports as well.
Sports?
Yeah. So not that I play but I watch. So I do spend money on those subscriptions, and it does give me a bit of it allows me to de-stress It allows me to de-stress. So sometimes at night you don't want to think about finance all the time and watch football or basketball. I think that's better
Okay. So it's basically family and a bit of entertainment
Yes.
Nothing too extravagant.
No. Fortunately not.
Okay, this is more for myself. So I'm in this FIRE community financial independence, retired early. So I get another question from someone else. If you are trying to FIRE so fast, right, you're basically saving as much money as you can, and as a result, you're not living the life right now because you are trying to scheme and save as much as you can. Then there's the other community where it believes that what if I die tomorrow kind of community, the YOLO kind. So they want to live in the present. What would your advice be for people who want to FIRE quickly, but at the same time they want to have a life?
Well, okay. So I think the concept of FIRE is interesting, right? So the whole idea is to make money, make as much money, and save as much as you can so you can retire early. But let's change the question a little bit, right? What if you want to make a lot of money, but that means you have to take a job you absolutely hate, versus making money, making lesser money, but you enjoy your job, right? Because I think if the only aim is to retire as early as possible, then the correct answer will be take the job you hate, save as much as you can each month, and then hopefully within 5 years or 10 years, you don't need to work that crappy job anymore, right? But if that's not the only aim, and you also want to maybe enjoy that process of retiring early, then the alternative will be you take a job that don't pay you as much, you still try your best to save, you work longer because you save lesser because the income is lower, but it's okay because you enjoy your job, right? So to me, I feel like if given a choice, assuming I want to FIRE also, I would rather take the job that pays a bit lesser, not because I don't want to FIRE, but because at least in the process of working towards my financial freedom, I can still enjoy the process. Right. And on the other extreme, you talk about people who want to YOLO, you only live once, right? I think the idea is that, you only live once, right? So what happens if you reach the age of 60 and then you realize that you don't have enough to live well for your golden years.
That's the CPF.
CPF, but even then, you know, your CPF, there's a huge variation, right? You
Right.
can take the basic retirement sum,
Yes.
which is, you know, less than $1,000 today, or you can take the enhanced retirement sum, which is 3 times the basic retirement sum, right? So even within CPF, there is different levels, right? And so my thoughts are that you only live once, which is why that you can enjoy and should enjoy today, but you also need to make sure that you have enough set aside for your tomorrow. So try to enjoy within the budget you set yourself lah. That's my advice.
Okay. And find a better paying job lah, maybe.
That you enjoy, preferably
That
that
you
you
enjoy.
enjoy. Yeah, I think that it can drain us out very quickly if we
Right.
have a career we don't enjoy.
Right.
So I think for a lot of us, you know, it's a bit like education, right? Like if you think about our education system, you know, we spend at least lah, you know, most of us going uni, you know, I think 15, 16 years in education, right? The aim of education, one of the aim of education is to prepare us for the working world, right? But the other aim of education that as kids we want our children to have is to be able to enjoy the education process, right? Even if the end result is a little bit lousier, you know, but then if the kid enjoy the education process, there's so much more meaning besides just the grades.
True.
Right.
Like if you get good grades but you hate school.
So when my wife and I, when we had our first girl, we also talk about whether or not she wants to stay at home and look after the kids, right? And obviously the one concern is money, right? So you go from dual income to single income. So that's definitely a financial stress that we have to cope, right? To be honest, we could have made that decision if we want to. But then it wasn't just about a money decision. So I just want to say it's not because we want more money so that we can travel every year that she worked, or we want to buy a car, live in a condo, that's why she worked. That was not the reason why she decided to continue working. The reason is because we also believe there's a value in working as well,
Right.
a job that she enjoys. And you know, stay-at-home moms, they also really make a sacrifice.
Right.
They make a sacrifice not just in terms of income, but they make a sacrifice in terms of the kind of career that they could have had. You know, the kind of networking, the learnings of working in a working world that they have to give up in order to be a stay-at-home mom. So I think, you know, some of these things, not just purely dollars and cents sometimes. I feel like the experience is what people actually want also.
Okay, yeah. So I think that's the same for me. Like my wife is thinking of quitting her job when we have our second kid. Then I would tell her, like, if you want to quit your job, it's not just money loss, right?
Yeah,
you're also losing your connection to the outside world, because your world is now the kid, you and the kid. That's all. Already.
Yeah, and I mean for people who are working as well, you know, especially if you're working in a job you like, there's a lot of benefits in that job that we learn from it, right? We know people, we learn from it. We grow as a person when we work with others or in the industry. So I think that is also what I mean by, you know, it's not just about the money. Sometimes it's about wanting that experience, that positive experience.
You mentioned that you started DollarsAndSense in 2012, so it has been almost 10 years.
10 years, yeah.
Congrats.
10 years since, yeah. I never expected that we will be doing this full time lah.
Yeah, I think not many startup can survive a 10-year thing.
I mean, we didn't even think it's a startup. We just thought it was a passion project. Let's just do it since we enjoy doing it.
So now it has been a big part of a career. Like when would you think of like moving on from this?
Oh, this is a tough question. I think like the truth is that I'm not really thinking about retiring or anything from the job. You know, as long as I'm healthy enough, I still want to continue. But realistically speaking, I think like for us, you know, once we hit our 50s, which to me will be in about 15 years time, you know, we should start to think about, you know, taking maybe not even 15 years, maybe in 10 years time, taking a step back from the company so that there is hopefully room for it to continue operating even when we are no longer the people that's in charge anymore. So I think for me that succession planning has to come in sooner rather than later.
Do what Sydney did lah, to kind of straight away throw to people.
I don't know whether you're at this scene.
Just kidding, he didn't throw to them. I spoke to Ming Pong recently. They had a very long discussion. So I think kind of the founder of Seedly, he just him and the other co-founder they just wanted to move on to bigger things lah.
Yeah.
So that's on, they pass it on.
Yeah, I think Kenneth is a little bit different because Kenneth and Timing, the co-founders at Seedly, I think to me he always strikes me more as a serial entrepreneur. I always knew that Seedly will not be his last business. Right. Whereas if you ask me, right, there's a good chance that I won't start something after $&Sense. So to me, I may as well stick it out, and work at something I like, because I may not find something I like even better in the future.
So given how crazy the market is right now, how should like new investors or even people like me invest our money now?
Wow, okay, so like I don't want to give people any investment advice on what you should invest in, but my two things I will share, right? The first is that a recession or a market, is a time where you can really see which are the strong companies and which are the weak companies, right? I mean, Warren Buffett has this saying, when the tide is low, then you see who is swimming naked. Okay. I'll just say that recessions will always come and go. In fact, I did a calculation recently. In the last 22 years, I think there's at least about 7 significant or major recession. .com, SARS, GFC, Euro debt crisis, China-US trade war, COVID, Ukraine-Russia war this year. So last 22 years, about 7 major things happen, right? And in each of these recession or each of these black swan event, right, what you realize is that the strong companies will survive. The weak companies will not, right? It's just a natural thing in life, right? And as an investor, what I would say is that you want to make sure you always invest in the strong companies, not necessarily the biggest return in the short term, but the strong companies, because they will survive the ups and downs, right? And that's my first advice. The second advice on top of the first advice is take a dollar cost averaging approach if you can towards your investment journey. Why? Because during a recession, you don't know how long it will last. If it's a short one, good. Once it go up, our portfolio will be in the green again. But what if it's a long one? What if it takes 2-3 years before the market recovers? To stay underwater for 2-3 years can be very discouraging for an investor, right? But by having a dollar cost averaging approach, you will be able to accumulate more units when the prices are low, which means that even if the recovery takes a long time, all it requires is a small recovery and you will be in the green already. So that's my advice. But that doesn't mean you can anyhow DCA into anything, right? Because there will be some companies, some asset classes that will die and they will never come back again. So you must choose wisely the strong players. So a follow-up question to that is, you are DCAing because you don't know where the bottom is. But what if based on past historical data, like that maybe a Fed pivot could signal a market bottom, then would it be wise to lump sum everything in when the Fed pivots? I can't advise but I will say that it can be a bit there is a good chance that you will be right, but there's a chance you'll be wrong also. Right? And if you are wrong and you don't have any more ammunition to invest, then you'll be sitting on losses for a while, right? And I think that is not necessarily what most retail investors will want. I think it's easier to take the market timing out, especially, I mean, I'm just saying that most of us are not going to be able to time it as well as we think we are going to all right? Unless it's you
I mean, it's not me.
or someone else that's not here that you should interview, right? Yeah, but for most of us, we can't. We may not even have the time to really look into companies, right? So I still would be more comfortable personally with just dollar cost averaging. Even if it's a small amount, it's okay. Sure, the market might go up, then you might think to yourself, should have invested 10 times more last month, right? But then it could have easily gone down as well, right? And imagine if it gone down and then you there's nothing you can do at that point in time.
Wait 1 more month for your salary to come.
Yeah, but then if you already have that savings and you dump it all in, then your averaging down will be not so strong.
Okay, understand. Okay, I think we are at the end of this interview. Thank you, Timothy, for spending your quality time with me. If you guys have not checked out $&Sense yet, do check them out.
We have a website, DollarsAndSense.sg. We are on YouTube as well. You can just find our channel. And then We're on Instagram as well, in Telegram as well.
Yeah. Do check them out lah. I'll put all the links down below lah. So I think with that being said, that's all for today. Bye.
Bye.